Hey, we made it. It's Fed Day. Good morning, everybody. It's not just Fed Day, actually. We had a bunch of companies decide to drop guidance on us this morning, completely out of the blue. So we'll talk about that. We'll, of course, talk about the Fed today. We'll take questions from our chat. Gil Morales is our guest. He is the author of the Gilmo Report. His site is virtueofselfishinvesting.com. He'll be on in about a half hour, 35 minutes from now. So we got a lot to get to. Let's roll the intro and start the show. This is Pre-Market Prep with Joel Elconin, Dennis Dick, and Spencer Israel. So it was a disturbingly quiet morning until about 20 minutes ago when Lowe's decides to drop some guidance on us, and Nucor decides to drop some guidance, and Eli Lilly decides to drop some guidance on us for no reason. I'm sure they have their reasons. But anyway, good morning, Joel. Good morning, Dennis. How you guys doing today? I'm excited. It's Fed Day.
Yeah, it is a Fed day, and boy, I tell you, everyone and their brothers talking about it. Let's run down the futures real quick. We're basically up a couple ticks at 28.75. We're just about equidistance from the high and low. Pre-market high 38 and a quarter, nothing up there for you. Pre-market low 46.2050, nothing there for you either. Crude down 95 cents at 69.78. Now under that psychological $70 level. That's good for inflation, right? Inflation going down. Gold just clinging to the 1760 area, down 220 at 1770.10. Silver loses 22, down a dime at 2182. Bitcoin in a consolidation, down 265 at 47,605, and Ethereum going the same way, down $22 at 3809. So, not a lot of big movements here in the futures markets as we all wait for the big Fed announcement. Triple D, how you feeling about the SPY here? I know it's a worthless indicator, but
Worthless
do you have
indicator.
because I have a number. I have a number in the SPY, and I
I
have
see
a
what you
number
mean.
that corresponds in the SPOOs.
Yeah.
It's not a daily high or low, but it's a number, a nice round number. That I think if we hold today and next couple days, I think we're going to be in pretty good shape. And I'll go easy on
What's
you.
the
What do you
number?
think that number is?
I think it's yesterday's low. I think it's 460.25.
Yeah.
That's your
Yep.
quarter. That's kind of the 50% retracement of the recent move as well. It's a nice coinciding. So you go the 450 up to the 470 and back down to the 460. So, you're trading in the waves, the 50%. We know we don't use a lot of fibs, but I love the 50%.
Yep.
The only fib I use, I already said there's 4 pages in my technical analysis book. The first page is support. The second page is resistance. The third page is trends. And the fourth page is the 50% retracement. And there is no fifth page. That's the end of my technical analysis. I just taught to you in less than 30 seconds. Now you have your TA degree. That's all I need to know. Support, resistance, and trends,
CMT
and 50%.
by Triple
Joel's
D.
got a few extra things, but there is not a lot more. Joel used simple technical analysis too.
No,
You don't get
and
into
then
crossovers and death crosses and golden crosses and any other crosses out there. Support, resistance, trends, and 50%.
what about the Ichimoku cloud?
I don't even know what that is, and I don't care to know what it is.
It's a chart, and there's just like a cloud above it. We had a guy on.
Point and figure.
I think he was from Kentucky. Did we have a guy on from Kentucky that talked about that? It might have been pre-Spencer. But
I hope he's
anyways,
doing okay if he's from Kentucky. I saw the footage
oh, that's
last night.
right.
Holy
Yeah.
macro. So
And just as far as a closing basis goes, we were a little worried last week, and we closed and had a couple closes in the 4,500 handle. The 6 through 10 lowest closes are in that area, and then there's high closes right near 4,700, with the highest of the high closes coming on Friday at 4703.50. So get some closes down here, form support down here, then I'll put on the Super Bowl hat for 4,800 by the end of the year. But
I like the Super Bowl hat.
yeah. I mean, you guys are jumping off the boat. Oh, we're so afraid of the Fed and we're interest rates and The market goes up
afraid.
6 to 8 months after the first interest rate cut. That's what Ryan Dietrich said. So I'm going with Ryan and his
Ryan does know his
stats.
stats. We'll give him
Yes,
that.
he does. Or
I don't
I
know.
guess maybe he
I've
does.
been raising cash, a little bit concerned, but again, I'm still sitting with a lot of stock. I haven't sold any of my big guns, so I don't know. I'm very torn. It's a tricky market, man. This is a very, very tricky market. So I'm torn. That's all I can say. Torn.
All right, let's get
Torn.
to the
Torn.
guidance cut parade, huh?
There's a lot of
No,
guidance cut here
it's
today.
not a cut parade.
I think
But
it.
no,
Well, okay,
it's
sorry.
not. It's not. But let's start with Lowe's here. And I just want to point out, actually, and let me share my screen for a second here. With regards to Lowe's, this is a company that has raised guidance like 3 times this year. This is a lot. I'm going to zoom in. I'm aware it's hard to see. Um, but all I did was I went to a news feed and I filtered it by just guidance, which you can do, and I got every guidance headline related to Lowe's. So we obviously have one this morning, right? This is Lowe's. They see fiscal year 21 sales around $95 billion. They see fiscal year 22 EPS in the $12 range, a high of $13 a share. That's above the estimate. They see sales guidance for next year in the $94 to $97 billion range, which is basically in line. But I was like, wait a minute, how does that 95 billion for the fiscal year 21 for right now? How does that compare to prior? Well, it's in line. That's what they said their guidance for this year was going to be during their last report a month ago. They also previously raised their guidance. If you scroll down, they raised it in August, and I didn't go far enough, but I'm pretty sure they also raised it in like February. So Lowe's has raised guidance for this year several times already. And what they did this morning is they just reaffirmed the prior raise. They're like, yep, we're still going to see around 95 billion in revenue for this year. And for the first time, they actually gave some numbers for next year. They did at the same time boost their buyback by $20 billion.
Yeah.
And I'm sorry, that's what they said. And they see comps declining next year over year, sales declining either in the down 3% to flat range. So best case scenario, year over year, flat on the comps front. Anyway,
Back 1 second.
the chat is not the chat. The chart is more important because we were watching this as it hit, and my first reaction was, okay, the number is not that bad. They reaffirmed their guidance that they'd already given, and we got some color on next year, and it was more or less in line. Maybe you could argue a smidge on the light side, depending on which estimate you want to use. Regardless, again, I will repeat, Lowe's has raised guidance twice this year. They've had an incredible year. That being said, the stock reacted in a bad way off this headline. I was sort of scratching my head. It's obviously been a great year. I guess the implication, Joel, is like, oh, it's not going to be next year's not going to be as good. Maybe that's what I mean. That's kind of what they said. But even so, I mean, this almost seems like splitting hairs to me.
You said a lot there.
Yes.
But I mean, you did have some bad news from the company, right?
I wouldn't even
So
call it bad news. I would call it not amazing news. It's it's like not amazing, but it doesn't make it bad. I don't.
okay.
It doesn't seem
Well,
that bad to me.
the street is looking at it as bad news. I don't know what the expectations were. Full disclosure, I think I'm long this thing from like $40 going back 5 or 6 years. So I'm not selling it on this news. Shorter term perspective, 238. You got a nice bounce off 238 and you hit 244. So that's just like the early digestion. I'm going to give just for today, I'm going to give 230 the pre-market low. I'm going to give 237 to 238 as possible support because 37.15 fills a gap. And this is going back quite some time. So usually on the gap fill the first time you catch it. Above 244, I mean, this thing can go absolutely anywhere. I think lot of people now 250 is going to be your major resistance because that was your low yesterday, right around a round number. But the company gave you bad news, so maybe cover short on this. But company gives you bad news, I don't see why you need to rush out and initiate a long position in it.
I know it just seems like how low did we got? We got to like 237, 238, whatever. I mean,
Yeah,
yeah, it just seems like an overreaction to me. And if you want to have some fun, Joel, look at Home Depot. I know you saw this already, but actually, Lowe's, Home Depot, um, uh, a lot of these names got hit. A lot of names related to Lowe's got hit. Lumber liquidators is offered down here. Uh, they all got hit on this headline, and it doesn't even seem to me that bad of a headline. Yes, they didn't say that next year is going to be the best year of their lives, but they're coming off an amazing year. What more do you want? I don't know. I guess it's to me. I was watching it go down, and I kind of thought, okay, the company's already raised guidance twice in the same year. Um, are you not entertained? You know what I mean? I mean, I don't know.
yeah. Lowe's now or Home Depot, boy, that for you guys that don't know, I had a double or nothing with Spencer when it was at 410. And it was 400 versus 420, and it got down to 0022, and Spencer was ready to concede, but Triple D said no, it didn't hit 400. And then it got some bogus upgrade. I don't know what bozo. Who's the bozo that upgraded it on this day? And it popped to 420.61. Who was that guy that cost me some money?
It
Hit
was
420.61, and now you're back under 400. That's a
what was
tough loss.
it
Who
was
was that bozo?
there was a couple. Oh no, there wasn't. There was it Oppenheimer? No, that was oh yeah, it was Oppenheimer. That's what it was.
Yeah,
Yeah.
never listened to them. Y well, you're hanging out near the pre-market low, so it looks like maybe this one this is getting less of a bounce than Home Depot did. You got only one daily low at 390.81. You're a buck away from that, but after that, it really opens up to 380, and then you got a gap fill. So, specific to lows, I this under 390, this thing really opens up, but down 1020, pre-market low, kind of coinciding with the daily low. I'm kind of mixed on this. I kind of think the home builders. I don't know. I still think one segment. I know inflation is bad and things are more expensive, and I know rates are going up, and that's not good for housing. I just kind of think that just the pure supply and demand, for houses is there's much more demand than supply. I think
Right.
people are still fixing up their old houses. I mean, this doesn't make me turn bearish on the housing sector or Home Depot
Heck
and
no.
Lowe's.
Heck
It
no.
doesn't. One little guidance, or one little adjustment from Lowe's, I don't think's turning the whole market.
Yeah, and for all we know, Joel, they're being conservative and they're gonna come out in 3 months and say, oh, we're raising. You know? I mean for
Yeah,
this
they probably got a little bit ahead of themselves. And just at 9, what a great day to have Jay McCandless on Wednesday. Wednesdays with Wedbush. He's going to be joining me on pre-market prep plus. He covers the home builders. Had a talk with him on Monday, and he had some very interesting things to say. So, good day to have him on. But there's your Home Depot. There's your Lowe's. I know Dennis was looking like at the XHB. Is that because that is a component of it that's trading lower, I assume?
they were.
Yeah, 36.
They all got hit on this. They all got hit on this.
What
So
are some of the other HOV? Isn't that a Hovanian? Isn't that a home builder too?
dude, I used to own that. Did you know that? I used to own that stock.
Hmm.
My dad bought that for me a long time ago. And
When did you sell it?
heck yeah, I sold it. This thing's had like 4 reverse splits.
Oh, really? Oh, okay. I didn't
Yeah.
think it was that great a performer. Who falls into the Home Depot Lowe's land? Anybody
Um,
else?
Not really. Lumber liquidators could be maybe like a tractor supply, but I would look at like the XHB. I would look at the ETFs like that, but there aren't that many. Um, I was just surprised to see Lowe's get hit like that on a headline. But anyway, we have other guidance this morning, Joel. And to those asking where Dennis is, Dennis will be back. He did warn us that his kids are doing what kids do, which is yell and scream. So he'll be back when that gets under control. But we had, in addition to the Lowe's number this morning, we also had guidance from Nucor. If you want to pivot to steel here, Nucor gave more specific, more short-term guidance for this current quarter. Their earnings per share, they guided in the $7.65 to $7.75 range. That is below where the estimate was at $7.95. So NUE should be trading down on this, and I hadn't looked at it, and it is. So that makes more sense to me.
Down 412, 114.30. I think these companies are just pumping the brakes a little bit. The feel their stock price got a little bit ahead of themselves, high expectations. If there's a time to take the bloom off the flower, it's when your stocks are trading at all time highs, and there it is, down 412. Only 11,000 shares have traded. If I had to look for a number on this one, I see a pair of lows around the 210 area. And then, interestingly, you're not that far from the bottom of yesterday's range. So if you want to short at old support, new resistance, you may get a look at that at 1460, 1842. That might have been pretty close to your all-time closing highs. So that's a look. Nope, it's actually 1938. But for short-term resistance, if we get above 114.60, things open up until the close. They may shrug this one off.
Dennis, do you have thoughts on Lowe's / Home Depot in that trade?
Yeah, I mean, again, you guys were getting it right. Sorry, I had to just leave for a second. It's it's expectations. So, I mean, the world is expected of these companies because we know, like we've been talking about, that these stocks been on a hell of a run. Everybody's doing stuff on their homes. Expectations are ridiculously high for Lowe's and Home Depot. So when they come out and the guidance is kind of in line, it's not good enough. So we can say, oh, it wasn't a guidance cut. It was almost like on the earnings side, you could say a guidance raise, but it really wasn't on the sales. So that's why they're like, okay, people all of a sudden are looking, is this as good as it gets? Right away the market thinks, is this as good as it gets? So maybe it was an overshoot when they knocked it down to 238, which was down $14. It's kind of found its home in the middle here. Let's let the dust settle on this, and we'll see, because expectations super high. These stocks have been on incredible runs. Lots of capital hiding in these stocks, saying this is the best place to be. So I think when you see a guidance in line, it's simply not good enough.
All right, fair enough. And then Nucor, we also just covered. Do you have thoughts there?
Yeah, I own Nucor in the long-term portfolio. Had it forever, not selling it. I mean, I didn't see the actual guidance, so
Well,
assuming
it was
cut.
weak. It was weak. Yeah.
Yeah, so obviously you're going to see your steelmakers down, and Sympathy X is down a little bit, Cleveland Cliffs down a little bit. Full disclosure, I do have Cleveland Cliffs as well. I don't know. I'm sticking with it, but again, expectations are high for these companies. So when they do lower guidance, it's an issue. Do I think there's going to be buyers below on Nucor? Yeah, I think somewhere, but I don't know if I'm necessarily buying the dip right after they cut guidance.
And then the third one we had this morning was Eli Lilly, LLY. They raised their guidance this morning, and they said, "Yeah, we're gonna have an EPS for next year in the $8.15 to $8.20 range versus an estimate in the $7 range." So they came in $1 above where the estimate was for their EPS for this year, and Eli Lilly is trading higher off that.
Every drug stock that seems to pop eventually on these one-offs eventually starts to leak. It's a big move for Lilly. I wouldn't chase up $12. Great company. Long term, you're probably fine with it. Short term, I don't buy rips.
Coming up, two interesting areas. I can't buy it up here. I mean, obviously, 260 looks like very mild support here, basis the 15-minute chart. But what traders should be paying attention to are two levels on the upside. First of all, your pre-market high comes in at 263 even, right on the kisser. To me, that's pretty darn close to the 62.32 high. Still, so that it's still in play. We haven't. Oh no, is it 60? Really got the 63, huh? All right, so 62.36. If
Big
that's
move.
not enough for you
Big
Eli
move.
Lilly bulls and it gets up around 265, put a little alert on there. Two consecutive highs, 64.94 and 65.88. I usually split those numbers, but since this is running up here so fast, I would just say, hey, 265. if I was long and I got lifted there, I don't think I'd have any problem seeing it go a little bit higher. So two potential resistance levels in Eli Lilly.
What's interesting is it's been a pretty brutal year for, and I don't know if Eli Lilly counts as biotech, but it's been a pretty brutal year for biotech. Like if you look at the IBB, right? Pretty tough year.
We talked about this 2 days ago. It's
Yeah.
been terrible. I mean, I think some of these biotech stocks are probably buys in here. I mean, you're looking, at trying to get opportunities. The XBI is down from 174 to 108. I mean, if you're just blindly buying the XBI here and sticking in your long-term portfolio, you're gonna be happy 5 years from now. I think so. I think you got huge support at $100 too. But obviously, it's what's in it. But there's just so many. You think about aging population, think about what we've went through with the pandemic. I mean, I think there's lots of opportunities in all the biotech stocks here.
Actually, yeah, Eli Lilly is not in the IBB, so I guess he doesn't. I don't even know the difference. I gotta be honest.
Lilly's not in the IBB, eh?
I
Well,
don't
I
know.
guess it's not biotech. It's
I don't know
pharma.
the difference between
I know
biotech.
biotech, pharma.
Can someone explain to me what is the difference between biotech and pharma? Seriously, I don't know.
Technology, Spencer.
What does
I
it
actually
mean?
don't know really
What
either,
does
to
it
be honest
mean?
with you. The fundamental difference. I've
What is-
traded those things for 20 years.
I
I
don't know.
never asked myself that question really. Why is a biotech stock a biotech stock, and why is a pharma stock a pharma stock? They both sell drugs, so it's a good question.
I don't know either.
It's
Anyway,
a good question.
all right. Did we get any more guidance this morning? I don't think so. I think it was just those three. Yes, I know examples of biotechs. I'm
Yeah, we
asking.
get that.
Yeah,
we get that Lilly is not a biotech. I think we just clearly said that.
I think we just learned that now. Anyway,
I
okay.
know there's got to be something there. We got to have someone in our chat that's up to
Wait,
that.
RFCC says you're a biotech until you actually make something. So maybe.
Until you're actually selling drugs.
Until you're
So
actually.
you're just like trying to sell drugs. I don't know.
Uh,
Medtronic. What's Medtronic's news? It's getting hit too.
Really?
Wait, Roblox. We got guidance everywhere here. This is
Oh, shoot.
guidance
No,
day.
no,
Forget
no.
Fed Day. It's guidance day.
No. Medtronic isn't guidance. Medtronic got an FDA a warning letter from the FDA
Oh,
for their diabetes business.
it's never good.
It related to recalls that they had in July of this year.
Yeah.
For their, I'm sure Joel knows about this for their whatever, the Mini Med 600, whatever, and so MDT. That's why they're down because they got a warning letter. It's not guidance. They got something from the FDA.
Okay, well, Roblox is guidance, and that actually is
Oh my
trading
goodness.
down on their guidance here.
Okay.
So let's talk Roblox.
This actually shouldn't have been a total surprise. I did see yesterday that video game sales as an industry were down month over month for the first time in 6 months, I think is what I saw. It was anyway. Roblox, yeah, this just came out a few moments ago. I totally missed it because we were live. They reported their daily active users for November up 35% year over year. That seems good, but I don't know what the prior rate was. They guided sales for November. What? They guided sales in the $185 million range, which is up 85% year over year as well. They guided net bookings up 22 to 24% year over year. I don't know what these compare to. So
it's hard.
I like in a vacuum. I don't know if that's good or bad. I mean, I can tell you by the reaction that it's bad, but I wouldn't have known that without looking at the chart.
What's with all the random guy? I guess everybody wants to get their guidance out of the way before we start getting to the holiday season. So Roblox down $5 here now, making new lows on the move. I would let it digest because you don't know how the market's going to interpret this. This just crossed 7 minutes ago. It's very soon. You would think psychological $100, but again, we're in early digestion here, so anything can happen.
They're hitting it 140, and all of a sudden you're back looking at 100. Very important level to hold here, and it's not at 100. There's a pair of lows that is protecting the gap, and that is at that's way down at 93. Woo, doggy. Next daily low comes in at 96.85, and then you drop to 93, and then below 93 you got a big old gap. I mean, we've seen what happens to these stocks. We've seen what's happened to these charts when these things have these big moves up, and then they reverse. So, absolutely not stepping in front of this one. maybe get a bid out at $80 if you want to you look at this long term.
Wondering if the rest of the sector is moving off that. ATVI is smidgen. I don't know. What other what are the Roblox peers?
They're it's tough.
Sims.
No, but I wouldn't say there isn't a lot of direct peers
Yeah,
for
yeah,
Roblox.
they don't. Oh, they don't have one. Yeah,
I've never traded like the video game makers, but that's not really. They're their own thing. They do their own thing.
yeah,
Obviously you could say it's a metaverse play, so they're gonna have other metaverse stocks. Well, not really. It's a Roblox thing, so it's
yeah.
tough. There's not a pure sympathy play for Roblox.
No, there really isn't. There really isn't. All right, I think now we've covered all the guidance this morning. That all came totally out of the blue.
Yeah, it
Did not expect that. Let's check in my movers tool, see if I missed anything else. Did Livent give guidance today? Because they're down. No, that was just a downgrade. Now I'm just assuming it's all guidance. Did EBR give guidance?
Everything is guidance.
No,
It's guidance day here.
no.
Wednesday.
Did
Guidance day.
Leslie's give guidance? Because they're down. No, they're doing an offering. That's why they're down.
Yeah, they're down on
Okay.
an offering.
Okay, never
We're
mind.
looking at every stock that's moving through our filters now and say, did that give guidance? Did that give guidance?
Well, also what you got to keep in mind too is when they do these lower guidances, how many times have you seen them hit the stock and then it muddles and then it just hangs out and then they come out with like the numbers that they were and they slam the stock again basically off the same news. And that's so I don't know when earnings are coming up for these companies. It's probably a little time away, but how see these stocks get punished, they give lower guidance, then they come out and they like meet the lower guidance and they get punished again. So companies giving you bad news. So if you're a fader, then fade these moves, but you're getting direct information from the company of their expectations. So take
All
it
right.
and use the information as you will.
Just as a PSA, obviously, if you don't know, the Fed today FOMC meeting will end this afternoon. There will be an announcement and a press release as far as what they decided that'll be released at 2:00 p.m. Eastern time. Roughly a half hour later at 2:30, Jerome Powell will take the podium and he will address questions directly from reporters. And so,
Look at that roadblocks.
what are we?
Finding sellers.
100,
Spencer,
Keith.
tell her what's going on. Tell everyone what's going on at 1 p.m. Eastern Standard Time.
Yeah, you're gonna have to stay tuned to Benzinga all afternoon because at 1:00, Joel will be joining us on Benzinga Live with special guests Gene Munster and Todd Gordon. We're gonna have some fun. We're gonna talk Apple. We're gonna talk. I saw Todd was talking Disney yesterday, but we're gonna have a lot of fun there. So that'll lead us basically into the not right into it, but more or less into the Fed decision at 2:00. We will be live streaming the Fed press conference at 2:30. Right here on this channel as well. So be aware of that. And so the market will be reacting A at 2:00 and B at 2:30 to whatever the heck he says in the press conference, which
Maybe we'll stay. It depends on how long we go with Gene and Todd, but if we're on for the actual Fed announcement, that might be
that
that might be something to broadcast. But we're going to talk about is real estate tech dead? Sector rotation, and I guess the news today is coming that. We're going to talk about the metaverse, and we're going to talk about how much time Dennis is actually going to spend in the metaverse now that he has a new house. Is it going to consume our time, and can we make money from it? Of course, you got to talk about. We'll talk Apple and Tesla too. I mean, of course, with Gene on, and then waiting to talk to Todd. So it should be some interesting information coming from two really top-notch analysts and now money managers. They're money managers too. So a little bit twist coming at 1:00. Spoof's just bouncing around here.
Yeah.
We get nothing at 8:30. Retail sales, maybe.
Yeah, we did. We got November retail sales.
yeah, I
Whenever you see moving at 8:30, you can almost guarantee
You
it's
got
November.
it.
I
Let's
don't know if
go.
we care about. Do we care about retail sales? Honestly,
Well, the market's moving, so they care a little bit apparently.
really? All right, fine. The
Look at this.
retail sales were up 0.3% versus a 0.8% estimate. There you go. So it's smidge light. You know why? Because they were pulled forward, people. Because they were pulled forward from October and September. That's why. Come on, nothing to see here.
Look at this chop. Hey, we're rallying, though, folks. They're liking whatever they saw. Pre-market high comes in at 38 and a quarter. Still looking at the 15-minute chart. So let me just go to the 1 minute. Rarely go to the 1 minute, but there you go. You've just tacked it on. We were trading right at 46.29. They liked it. They pop it. Couldn't get quite to that pre-market high. But also looking at the 15-minute here, I was just looking at that before the number. Boy, oh boy, zigging, and you got the accordion chart going on here, folks. And the trading range is, 46.22 is the bottom it, and 46.22 to 46.36. If the pre-market trading is any indication, we're going to be a lot of chop and slop in that area until the big news at 2 o'clock.
All right, I guess I didn't realize that that number was going to actually move things. I apologize for not realizing that because we had retail sales, we had import prices, we had export prices. Those were both in more or less in line though. Exports came in a little bit higher than expected, but anyway, retail sales down or up, but not up as much as what the estimate was calling for. So good to know there. And yeah, the prior reading on the retail sales was up 1.7% year over year. So October's number blew it away. November's number was a little bit quieter. Again, because it's pulled forward. There's nothing to see here, people. Okay, it is 8:32. We're going to have Gil Morales on in a couple of minutes. Let me make sure I got to all the things on my list. I'm pretty sure I did because it's a quieter morning. Like I said, there really was no movers or no news at all until a couple of companies start dropping guidance on us. I do see some weakness today in the lithium space. You can look at LTHM as
What's
sort
going on with
of
that?
as your leader. Well, they caught a downgrade this morning. They're catching strays. They caught a down.
Oh, they really. Oh,
Yeah, they caught a downgrade
oh
from Goldman.
man.
Caught a downgrade from Goldman Sachs. So it's actually moving not just lithium, but it's moving kind of the whole space here this morning. So that's catching strays.
You know what this? You know what? I mean, this moves. This just moves lockstep with Tesla. I don't know why I took. I do own this one too. I think from like $5-6, and boy, oh boy, 32, 33 was looking good, but now, Goldman Sachs. I don't know. Let's see. They down. What day did they downgrade Southwest Airlines to a sell? Ooh,
I can look
n-
right now.
yeah. I could.
Search
They. I think they did it
LUV.
on. Was it Thursday?
I don't
They
know.
did that. They got on the right side of this one.
Uh,
Hope they
L-
do not.
LUV search by date. Goldman Sachs. It was the
Probably this gap down.
it
What
was
day?
it was the 10th. What day was that? I don't know. I don't know days of the week.
Yeah, they
It's
got
Friday.
it.
It's Friday.
Yep, they got that one. It went from 43.61 to 41.97. And now you got a double bottom, a must hold level at $40, 40.05 and 40.08. So I hope they're not as right on LTHM as they were in the short term on Southwest Airlines.
Yeah. All right, you know what? Let's bring on Gil Morales now. We love Gil. Gil is props to Gil for because it's 3 hours early where he is, so we appreciate him coming on early. But Gil always takes no prisoners, and I think Thad Thayer pointed this out in the chat. Was Gil the person that coined the term "arc lady"? Gil, was that you?
It was me, actually.
Was you? Are,
I've got a few other terms as well.
are
Also,
you
remember,
happy? Are you happy now,
may
Gil?
may the froth be with you. It obviously has not been with her so far this year, but genius is short-lived in the markets. Genius like hers during bubble markets. But what were you asking me? Am I happy?
Yeah. Are you happy now?
I'm just happy in general. I get to sit on my butt every day and trade the markets.
All right.
Basically semi-retired at age 45. Thank you, stock market, and just kicking back, writing websites, writing about the market, doing what I love to do. And I'm a lucky guy. Lucky, lucky, lucky me. I'm a lucky son of a gun,
I
right?
Gil, I the reason I like you because I feel like you and I think maybe I'm wrong here, but I feel like you loathe everybody, and I identify with that.
Yeah.
Yeah,
Yeah.
I
Yeah.
identify with
I'm
that.
with you.
I
Yeah.
wouldn't see. I wouldn't. Well, first of all, Gil received the first most cooperative guest of the year award. I sent an email to Gil asking him coming back, and the email has to go all the way to California. Before, like, I turn my head and I look in the inbox, he says, "Sure." no matter what. And I know
Sure.
he's getting up early. I really appreciate that, Gil. But
Well, I've been up for for about an hour and a half at this point. So, I mean, I get up at 4 a.m. That's when my trading platforms allow me to start trading. And guess what? I start trading. So,
all right, so help us put the Fed into perspective here. I mean, you've been
well,
through this rodeo a few times here. Inflation,
yeah.
higher interest rates, head for the hills.
Yeah, and I always think of that Emerson, Lake and Palmer song, welcome back, my friends, to the show that never ends. And that's basically what we're looking. I mean, every day I get up and I wonder what new WTF are we going to see today? Because this market, historically the market has climbed a wall of worry, but this market definitely climbs a wall of WTF. So there's always something new, always something weird going on and always something to trade. And right now, basically, we're on the short side, have been on the short side for over a month. And despite this little Omicron, or as some people point out, it's an anagram for moronic virus, which to me looks like a big put up.
I hadn't heard that one.
Yeah,
What was that
I
one?
actually used that about a week or so ago, and then yesterday I saw Stephen Forbes on CNBC or Fox or something using it. So maybe he subscribes to my report. I
I
don't know.
hadn't heard that. That Omicron is an anagram for moronic.
Yeah, and it is kind of moronic because we knew, when the news came out on Thanksgiving evening, uh, the doctors in South Africa who were treating cases said that the symptoms were mild. And nobody talks about the IFR, the infection fatality rate, or the hospitalization rate, which is pretty much zero. But man, the media is playing this one up, and it struck me as an alibi. So back when I worked for Bill O'Neill, he used to talk about something called Alibi Selling, and as you know, institutions, they can't sell in one day. Okay, their selling takes a
There you
process of
go.
many days, many weeks. And so he said they'll use this thing that he called alibi selling. So it is his term. And basically, they'll take a news event like this moronic virus variant, okay? And it's really nothing, but they go and hammer the market. It's a thin day on Friday and knock it down. And then what happens is that original news over the next few days begins to mitigate. In other words, they find out, oh, it's not as bad as it originally seemed. And of course, it didn't seem that bad when I first saw the news. So the whole sell off looked suspicious to me because stocks had already been selling off for a good 3 weeks before that, and you can look at Arc Lady's fund, for example. Can you guys throw up my screen?
Yeah,
You can.
you can.
How do I do that? Let's see.
Hit that share button in the middle and click on the
Share.
screen you want to
Oh,
share.
right
It's
here.
on the
Share.
bottom.
Right there, yeah.
Share screen. Okay, here we go.
Okay.
Share the right one.
And don't show us your account number, or do.
Oh, I'm on a clean laptop, so I use this one for presentation, so I don't have anything incriminating on here. Okay, so let's see. I think we're here now. So now you can see my screen.
No. You got to click you have to click it
Oh,
twice. You have
heck.
to select the screen you want to share. Click OK or whatever it says. Yeah.
Share.
There
I'll
you
get
go.
it.
There
All
we
right, there we go. Now you can see you guys are all on there, all your beautiful
Yeah, but
faces.
can you get us all? Yeah, there we go. Now we're talking. Okay.
Here we go. Okay, so here's Arc Lady's fund. Okay, and I like to joke about this one because this is essentially here's a weekly chart I want to pull up here. I think this is right. Yeah, I mean, okay, she gets this. Okay, so she's a genius, right? And
Mhm.
she coins terms like disruptors. We buy disruptor stocks, like that's something new. That's what they were calling .coms back in 2000. And of course, where did her genius go from there? Well, we can see as I scroll to the right on this chart, there's really no genius there. She just got lucky. And, I'm not going to pretend that the same thing doesn't happen to me because in 99, 2000, I was up 1,008% in my own account and up over 520% in the account that I ran for Bill O'Neill. But was that entirely me? Does the surfer create the wave? No, you just get a big wave, you ride it. Okay. And then if you're dumb enough to think that the wave's going to go on forever, you're going to crash on the rocks. And that's what's happening to her right now. So to me, this is one symptom of a bubble market. And again, bubble markets can go on a lot longer than people think. So this to me is a fascinating example. It reminds me of all the hotshot money managers. And I'm going to include myself in that, who thought they were geniuses in 99, 2000. And then you quickly find out that no, you were just riding a huge wave and you were too dumb to get off. Of course, over at O'Neill, we were all smart enough to sell into the climax top in March, and so we got out. And today,
But my question to you is, how did you know that was the top?
in March of 2000,
Yeah.
because there were textbook climax tops, where stock is up 8 out of 9 days in a row, 10 days in a row, 10 out of 11 days in a row. It's already had a big move because a lot of these stocks by March 2000 were up several 100%, right? They're going parabolic, and you have the biggest one-day price move in that 7, 8, 9, 10-day run, and you sell into that. So it's basically, something Bill O'Neill had taught us in terms of identifying climax tops, and every one of the internal portfolio managers at that time sold into it. So we all saw it, we all sold into it. So, it's recognizing when the froth just gets a little bit too heavy, and again, making sure that the froth is with you. So, and that means on the downside as well as the upside. And so that's how we got out. Now, this market's a little more difficult because what you see is a rotational breakdown sort of going on. So, for example, let me show you. These are some of the stocks we've been shorting off the peak recently. You have Cloudflare. Now, this has been one of this is actually a weekly chart. Here's the daily. This has been one of ARK Assets' big holdings, and of course, they're genius as well. It's going up, and notice how it takes the escalator up, and then it takes the elevator down roughly, or just tumbling down the hill. But that was a short when it busted the 20-day line, and that would have been right here. This is your first sign that it may be in trouble. Then you get the stalling day at the 10-day line. So I'm running a magenta 10, a green 20-day exponential, blue 50-day simple, and 200-day simple over here down at the bottom in red. And so that's your short entry point, okay? And that's just coming down. They're clobbering these things. And my theory has been that the higher PE expansion stocks, and that would mostly be the clouds selling at infinite PEs and 100 PEs, 200 PEs, whatever, would come down the fastest once things started to roll. And in fact, that's what you've seen. So this was my initial target group, and you can see something like CrowdStrike. Okay, this is a big leader, but you get this double top breakout. Okay, here where you double top, you're basically forming a double top. Some would call it a cup, and if it forms a handle, then maybe it's a cup. But this turns into a double top that breaks down. It bounces off the 50-day line here, rallies back up to the prior high, so it forms another double top. So this is what I call a mini double top, and it reverses right at the peak. Then it busts a 20-day line here. Okay, once it does that, now I'm watching it to see if it comes into the 10 and 20, and it does right there. Now it's a short, and then boom, they just clobber that thing.
Okay, so my question for you, Gil, now is obviously it's easy to pick on Kathy now. Obviously,
well, I'm not picking on her. I'm just, she was a genius in 2020. Her problem is she didn't realize that a lot of it was luck. Okay, and
okay,
that's really.
But my question is, we talk about selling at the top. What about identifying a bottom, right?
Yeah.
Yeah.
Well, I can identify bottoms when they show up. I look for undercut and rally setups in stocks. I'll give you an example. And a lot of times, in a market like we've had, that's been very much a whipsaw type of market, and buy the dip has ruled, right? I look for undercut and rally moves in leading names. So recently, after the moronic variant breakdown, you had Facebook, well, Meta Platforms now, okay, which to me is just a lame attempt at trying to capitalize on something that's trendy all of a sudden, the metaverse. But you see an undercut and rally move here. But what does that do? It takes you up into the 200 and the 50-day moving averages, and that may just turn into a short there. But that's what I look for in terms of bottoms. I'm also looking for undercut and rally moves in the indexes. So let's look at the Qs. If you're watching this last week, you actually hit the 50-day line. That would have been what's today? Wednesday. So that would have been last Tuesday. So you hit it on Monday, and you bounced off of it on Tuesday. And by that time, everybody's suddenly bearish. Everybody wants to get short. I'll start getting a bunch of emails from people. What do you think of this as a short? What do you think of that as a short? Well, yeah, it was a short a month ago, but if I've already been short 2 or 3 weeks and I'm making pretty good money, what I like to refer to as the piggy indicator, that's telling me we may be reaching a short-term low. Now, I don't know if it's an absolute, long-term low, but I think, we haven't had a bear market yet, and we'll see how that all plays out. But, a bear market is a different thing altogether. But finding these intermediate term or short-term lows when the market busts really quickly and then bounces is really not that hard, because you can see here on the Qs, and the Qs are really the area to focus on in terms of getting a clue as to where this market is headed, because over 70% of the S&P 500's performance in 2021 comes from 4 stocks: Apple, Microsoft, Google, and Nvidia. And so once those stocks start rolling over, that's going to bring everything else down more. And now we're starting to see that happen. It did hold the 50-day line yesterday, so we'll see how things play out today. Now that we're going to have the Fed announcing, my guess is they're going to report or announce shall we say, an accelerated taper. Now, if they actually raise rates, I'm thinking maybe the market could rally, because then the market.
They're not going to raise rates today, Gil.
No, but if they did, the market might perceive that as them getting aggressive on inflation. Because to me, it's not the moronic virus. Okay, it's inflation. It's the Fed. So if the Fed is still on an inflection point where it's starting to tighten and reverse its loose monetary policy, then I think they have to address inflation. I mean, the question is, does Powell want to be the guy who killed the bull market, or does he want to be the guy who triggered 1970s style inflation? And I don't know if you guys were around or old enough to remember that, but I remember it. And I can remember my mom going to the store and coming home crying because the stuff that she was buying, to feed us was going up 20-30% a day or a week when she'd go, and the amount of groceries she could bring home for the same amount of money consistently became less and less. And I noticed we started eating a lot more PB&J at that time. So, do you want to be the guy who triggers rampant inflation or doesn't do anything about it? Because we've got, the PPI, at least the finished goods number, I think it is, going back to 1982, it's the highest it's been since 1982. And what was going on in 1982? Do you guys remember that? Anybody?
I wasn't around for that, Gil. Sorry.
Okay, well, Paul Volcker, and I'm thinking Powell's going to go Volcker on us. That's one possibility. Assume nothing. And back then, interest rates went over 20%. The Fed funds rate went over 20. And you could open up a money market account and make 20% returns. So it's pretty easy. And today, where are interest rates? 0%. What's wrong with this picture? So in my view, the Fed is at least 4 interest rate hikes behind the curve. And we'll see if they just sit there. If they do, the market may not like that. If they do something, then it's possible you might get some sort of inflection. Maybe you get a dead Santa bounce going into the end of the year. But it's just a really goofy time.
So you're
for the
you're
markets.
ruling out a soft landing here. Yeah, basically.
Well, Joel, when has the Fed pulled off a soft landing? Never. So, they're going to do it now because they're such geniuses. I mean, look what they've done. They've gone crazy. They've taken things to an extreme, and they're sitting at the abyss, at the edge of the abyss. And do they jump in? Do they pull back? What do they do? They're
I
sort of
think they were
screwed either way.
forced. At one point they they did have the easy monetary policy, but I think that their hand was forced a little bit.
Well, at one point, it's been
with the
going on for
pandemic.
11 years. So, well, yeah, that was an excuse because they had to print more money.
Well, they
And
might have been raising now anyways. They might. I mean, just on the
it's
economic
possible. I mean,
cycles.
it's
Yeah.
possible, but I'm guessing probably not because I think what they are mostly in cahoots with are the banks and their member banks that they take care of, and all that money has flooded into the system, and now there's so much of it that I was talking to the guy who invented the money market fund. What's the first money market fund? I'm trying to remember. It came out in the 70s, but he was telling me there, people are trying to dump money into their fund. He can't find any short-term paper to
Right.
buy. Okay, because with the demand for short-term paper, you're going to push the rates negative, and if that happens, then his fund could bust the buck again, like it did back during the financial crisis in 2008, 2009. So they just flooded the system. And okay, I also people say, well, unless money velocity increases, you're not going to see inflation. Well, think about where you might be wrong here. Maybe people should consider that with the Fed having printed $7 trillion over the past year and a half, maybe what that does is it suppresses and distorts money velocity. So in other words, if you flood the system with a bunch of money that doesn't get spent right away, then yeah, you're gonna push M2 down, M2 velocity or M1 velocity down. So, there are a lot of dynamics here that I think make it a very difficult market to navigate. And so, if I start thinking about it too much, I want to start having a couple, 3 martinis, but otherwise it's either that or just look at my charts.
It's
My
8
charts
a.m.
tell me
Well,
Well,
everything.
Gil,
so
let's
what
take
about 2022? I mean, you're kind of making me feel like
Well, why do I need to care about 2022?
head
I'll
for
see
the
it when it gets
hills.
here. Well, but Joel, you make the mistake that you have to know what's going to happen in the future. I don't need to know what's going to happen in the future. I only need to know what's happening right now. And unless you're not paying attention, and you're sitting there fiddling with your silly little support levels and resistance levels on your charts, you're not seeing what's happening. And what's happened is that they busted a lot of areas of this market pretty good. And I'll just go through some stuff here and show you guys if you want me to on my charts.
Can we go
And
back to that Qs chart? Because I mean, we get an overall feel, and the Qs
I've got
have
it here.
not really been hit here yet. Like, I mean,
No,
if
but
you're
that's
nervous about this market, yeah,
But that's
because
because
of
you
Apple.
have
That's because
a
of
small
Microsoft.
handful of stocks. Yeah, I mean, over 50% of the weighting in the Qs comes from what?
5
Apple,
stocks,
Amazon,
6 stocks.
Microsoft,
Yeah.
Facebook, or now Metaverse, whatever Google, and you throw in Nvidia, you throw in Netflix. Netflix doesn't look so good right now, but that's why that's being propped up, and that's where the money is going. And if you look at the advanced decline line on the Nasdaq Composite, it's been making lower lows. And this last rally, you had a little blip up off the bottom, but it's really going nowhere. So it's telling you what's driving the upside is movement into a small group of stocks. And that just continues. And that's a warning sign. In the meantime, are you going to tell me that being bearish on the market is wrong? If I can be short something like this, are you telling me I'm wrong? No, I'm telling you, you probably have your head, in up your rear portal, and you're not paying attention. And so, and then these lithium stocks, these were short so over a week ago. So look at something like Lithium Americas. Is that getting tagged today?
Yeah.
Which one's getting tagged that got downgraded?
LTH.
I mean,
LTHM.
again, look at the steady uptrend. Okay, then it starts to get choppy as we push for the highs, and you get this big volume day here. And I think that might have been associated with something Biden said about making everyone drive electric vehicles, which is really smart, with no consideration for how that affects demand on the electric grid. But that's another issue. But again, you bust a 20-day line here, you undercut this low, so you get a quick rally. Okay, so if for some reason I'm able to get short here, that's a cover point. Okay, so when I cover it now, it rallies into the 10-day, and then you notice that. Forgive me if I start tripping over myself, but I start getting really excited when I look at charts. My wife says I'm a chart porn addict, but in any case, you see the stalling up here around the 10-day line. Then when it busts again, it's a short, and that just happened a couple of days ago. Now the news comes out, and everybody, they're coming after them. Well, these already topped. The other thing is, over the weekend, the Wall Street Journal had a big article about the lithium shortage.
Mhm.
And that goes hand in hand with what other shortages? Well, the coal shortage, and of course, that's topped out. The oil shortage, and that's topping out. We had the aluminum shortage, which was back in February. There was a lot of press about that, and that's actually when Alcoa topped once, but now it's trying to hang in here. It's being added to the S&P mid cap 400 index. So you've got this move up into these prior highs. So that may turn out to be, double top or quadruple top resistance. We'll see how this plays out. But, a lot of these shortages, think of some other shortages. Oh yeah, the uranium shortage. What happened to that?
Gil, before we let you go, there's a few people asking for your thoughts on crypto. What is your opinion on Bitcoin?
Well, if you follow me on Twitter, I called Bitcoin a short right near the highs when it started to break down below the 10-day and the 20-day off a double top formation. So we can look at this. This kind of gives you some representation. I trade cryptos, okay, and I'll trade them when they go up long. I'll trade them short when they go down. The only place you can short them, though, is the futures. But we look at this here. You have one peak here, GBTC. You get a double top breakout, and it fails. So I look at double top breakouts and double top type moves as potentially shortable if they reverse back below the prior high. So once it reverses back below this high here, okay, it's a short. So I go on my Twitter page, I say this is a double top short. Once it busts the 20-day line here, now it's really a short. Okay, and you're hitting it again. You get one little rally. Again, you undercut this low, you bounce up, you run into the 20-day line, and then you blow to the downside. I think this has gone lower. This has been a great short. And on Twitter, you get these idiots who will say, "Oh, well, if you're selling, I'm buying." It's like they want to make everything personal. It's
Yeah.
this sort of machismo thing going on, which tells you, and it's always men. Okay, you never hear women doing that because they don't have their heads up the rear portal like men do sometimes with their big egos. Present company accepted, of course, but
No, I'll throw myself in that group. Everyone's asking where to find Gil on Twitter. His handle is on the screen. It's at Gilmo Report. I love Gil on Twitter because Gil follows
Zero.
nobody. Gil
He
follows
follows
nobody.
himself.
He
You don't even follow yourself, actually.
I'm
He
a
doesn't even
big
follow
ego,
himself.
but let me
Can't
just
follow
say
yourself.
quickly on the crypto. Crypto to me is a symptom of the speculative bubble that we've seen over the last year and a half. Go look at a chart of Bitcoin going back to last March, and you'll see it's just a big speculative bubble. A lot of
It's
retail money
positively
piling
correlated
in.
with risk assets. I mean,
Yeah,
they
exactly.
try to say that it's alternative assets. There's no correlation here whatsoever. But in the last 2-3
Right.
years, that's not true.
No, like Nassim Taleb said last weekend, he had a great tweet that I saw. And he said, Bitcoin is not a hedge for inflation. That's true, because look at that move as inflation's going higher. Bitcoin is not a hedge for adversity, because look where it is now. And Bitcoin is not a store of value, because something that drops 30% in a couple of weeks is not a store of value. And Bitcoin is not a currency. Bitcoin is nothing. And I think that people may find out that to be the case. And with over 14,000 cryptocurrencies out there, you can't tell me that this stuff has intrinsic or endemic value somewhere. It's all garbage. As Warren Buffett said, they're turds. I mean, he's right and he's wrong, because when they're going up, they're great turds to own. But when they're going down, they're definitely turds to short. So, I just watch the charts, and the charts right now tell me that crypto is in danger. It correlates to the risk assets, like Dennis pointed out. And I think that it's going to be trouble. I think a lot of people are going to lose a lot of money in this space.
All right. The links to find Gil's Twitter are in the description. Also the link to his website is there at virtueofselfishinvesting.com.
I love that.
And Gil Morales always elicits a strong reaction when he's on. Some people love him, some people hate him. Gil, I have a feeling.
I don't really care.
I knew it. You were going to say that.
I don't care if you love
I don't
me or
think
hate me.
anybody hates him. I don't think
If my
anybody
positions
hates him.
love me, that's all I care about, and my wife and my kids. After that, the rest of you can go screw yourselves.
I knew
Anyways.
it.
Kinda
Gil,
got that.
Gil, no, Gil hates everyone, and
What can I say?
I identify with that, Gil.
But if you love me, I love you. So that's the
We
way
We
it
love
works in
everyone.
Gil's
Gil,
world.
always great stuff.
Love
Nobody
makes
breaks
the world
down
go round.
better than Gil.
All right. Gil,
All
have
right,
a
take
good
care.
one.
All right,
right.
peace
Thanks,
out.
Gil.
Happy holidays, Gil. Merry Christmas and a Happy New Year. We got to start saying that to our guests, guys, because
I mean, yeah, we should. I mean, Gil just breaks the technicals down so well. He kind of makes me want to sell everything right now. I've been nervous for a while. Now I'm really nervous.
No, can I look? The argument that the market's only up because of the 5 stocks is a good argument. That's the easy argument to make. And then you say, oh, well, the second they start going down, we're all doomed. Allow me to make the counter argument, which is, what if the other side is we already had the correction? We've talked about that all year, right?
I like where you're going.
We already had the correction.
Yeah.
Okay, growth is destroyed this year, right? So
Yeah.
what if growth, Kathy, anyone that's down, casinos, anyone that's down, by half this year, what if they start coming back, and then the mega caps, for your FANG names, they can go sideways, they can even go down a little bit, but the more the other stuff comes up, the more it's going to increase its weighting in the indexes, right?
Yeah.
And so what if we already had the correction, we just didn't see it because of the same 5 stocks that dominate the index, and if we do get a rebound in the 150 other beaten down growth names that everyone owned last year, then the market can keep on going higher, right? Like, what about that side?
Well, we've been talking about that. I mean, we've been talking about, like, I know Joel looks at the SPY, but I've looked at IWM, and I've been saying we've had the correction.
Right.
I mean, like, people are talking about shorting stocks now. And to your point, Spencer, this is exactly what we saw yesterday. And I actually wanted to talk about this, so it's like you're reading my notes here somehow. But we saw Kathy Wood, ARKK, yesterday, actually, not have a bad day. I mean, if you look, it was down $1. But I mean, really, it kind of held up well, considering that the S&P was rolling over. So AMC and GME had really good days yesterday. Yeah. So you actually saw that exact rotation that you're talking about. They were coming into some of the beaten down names, and they were selling Apple and the Googles and the Microsofts and the Teslas to do it. So it's really interesting that, that actually happened yesterday, what you're talking about. And that could absolutely happen too. I mean, we still have the Tina trade. So we still have concerns where I don't know where money goes. This is why I don't sell everything, because I don't know where I'm going to put it. So, I mean, I think this is a very, like Gil also said too, very difficult market to call out more than like what's happening right now. And that's why Gil jumps into individual stocks. He's picking on individual stocks. But I think, anybody that's market gurus that are saying, well, this is what's going to happen in 2022. It's all just throwing stuff at the wall and hoping it sticks.
How about Best Buy
nobody
yesterday?
knows.
How about Best Buy yesterday?
Well, there you go. It was a beaten down name that held up well, put in a double bump. The retailers had a really good day yesterday. Macy's has been going down every single day.
We mentioned that one too.
Since it had the big gap up, it's been going down every single day. Finally, yesterday, had at least an up day, a green candle. So that's something. So, I mean, you're exactly right, Spencer. I mean, yesterday was the selling of the stuff that hadn't gone down and the buying of the stuff that has got the crap kicked out of it.
Right.
So, so maybe we do continue to just rotate, and maybe the market doesn't, have an epic crash here coming. It's really hard to say. But again, if those stocks start to show weakness like the Apples, and I mean, all this money hiding in Procter and Gamble, all this, the one thing I will say is if you're hiding in consumer staples and you're sitting here and you're buying your Clorox now, I mean, these were companies that are getting their margins squeezed. I mean, these are companies that could have issues with inflation. This is not the place to hide, folks. I would not be hiding in consumer staples. I would not be hiding in even the utility stocks here because one, those yields are not great when we're in an inflationary environment. Two, is some of their margins are actually getting squeezed. So I think you're just trading stocks. I think you're buying some stocks and selling some stocks, but I absolutely would not be buying consumer staples up here at the highs, hiding and saying, well, I don't know where to go. I'm going to buy consumer staples. I think this market is very wrong to be giving a premium to Procter and Gamble here right now.
All right, I'm going to hop off. I'm going to cover some home builders with Jay McCandless over on Pre-Market Prep Plus. And Spencer, I'll speak to you in a little bit. Go
All
get
right.
him, Triple
Yeah,
A.
I just think it's an interesting argument. Don't necessarily assume. Yes, if the FANG stocks all go down 20%, yes, the overall market will go down.
Well, SPY's going to go down, but IWM isn't. So we have two markets. You're so right, Spencer, on all this conversation. It's such a great conversation. So I want to stay on with you for the next couple minutes.
Sure.
But I mean, it's such a good conversation because if you're invested in SPY and you're invested in Qs, you're invested in mega cap because it's so big. I mean, I have lots of SPY, lots of Qs. I'm heavily invested in mega cap. It's why my long-term portfolio, when I looked at it a week ago, hit an all-time high. I mean, here we are a market that's, yesterday was not a good day for my long-term portfolio because it was a little bit of value getting hit, but mainly because I own Apple, I own Microsoft, I own Google, I own all these mega cap stocks that have just grown exponentially, at Amazon, and the Qs. So, yesterday was a day I actually get hit a little bit. So, it's funny, I'm invested in SPY, but part of me thinks maybe I should be rotating out of a little bit of that mega cap stuff and buying a little bit of, the smaller caps. And I actually, in my long-term account, I did just that yesterday. I actually bought some IWM. It's a Canadian equivalent ETF that tracks the IWM. Okay. But I actually went out and actually put in a little bit of IWM yesterday because you know what? It's had the living crap kicked out of it. 244 down to 214 in a month. That's a pretty good pullback. We're down 15% here. They're talking about the markets at all-time highs. I think it's time to, if you're all mega caps and your portfolio has just been doing really well, maybe it's time to get a little bit of small caps back in there. Maybe it's time to get a little bit of retail back in there. Maybe it's time to get a little bit of growth, but the growth's still kind of expensive, which is why I'm still not picking on those names, although I did say I like Unity. So I think you've got to do some portfolio adjusting here because you know what 2022 is going to bring is definitely uncertainty. And I don't think anybody knows the answers to that. So I don't want to be all my eggs in one basket where I'm all just mega caps. I think, a little more diversification is going to help.
That's all this is. That's all the run up in ARK Invest. That's all it is. It's an argument for diversification because if you're diversified, then you're not down 12% like the ARKW is this year, right? Because ARK is concentrated. They are transparent. They only own growth tech.
They only own growth. They're all in on growth tech.
If you only own growth tech too, well,
you got hit this year. If you were only growth tech, you got hit.
You
got hit in the last 8 months pretty hard. And you've got to analyze your portfolio and maybe do some adjusting. But I don't think the adjusting time now is to go buy the mega caps and to go buy the consumer staples now. I really, truly believe you're so late to the party if you're jumping in consumer staples at this point in time.
All right. We got to hop because
I think that's the screaming short, to be honest. I mean, it's hard to short these stocks when they're going straight up. But if I owned all these stocks, I'd sell them all now. And I did. I sold my utilities. I had some long-term utilities. I was selling those to buy some banks because I'm just logically thinking I'm going to a rising interest rate environment. So if you're going to a rising interest rate environment, I don't want to own utility stocks in that environment. I don't want to be in an environment where I'm getting a 3% or 4% dividend. And then all of a sudden, you've got inflation kicking at 7, 8% here. I'm losing on that trade because those things won't keep up.
Right.
So it's tricky. Stay diversified because nobody knows the answer to any of these questions.
And my point was, if growth, and I'm using ARK as a proxy, can get destroyed, 20%, and the overall indexes don't go down, then who's to say the opposite can't happen? Where growth rips higher 20% and the indexes
it really could.
Right? So that was my point. Okay, we got to hop because we got live trading starting right now. So Dennis, have a great rest of your day. I'll catch you later. Everyone, please remember all the information from our show is meant to be used as informational purposes and not for investing or trading advice. We're going to go live on live trading right now with Ryan, Zunaid, Mitch. I'll hop in there for a few. This video will end a redirect to that. Hit that like button, please, and thank you. Thanks to our guest, Gil Morales. Thanks to all of you in the chat, as always. We love you. We do love you. Even if Gail says otherwise, we do. And even if I say otherwise, we do love you. So catch you guys over on live trading. Have a good one.